Welcome to G2's weekly market update, where we break down the key movements shaping global markets. From shifting trends in the United States economy to policy signals from Europe, Japan, China, here is what mattered this week and what investors should be watching next. United States. US markets ended a mixed week with large cap tech stocks posting their worst performance since November, while value and smaller cap stocks extended year to date gains. Concerns over AI investment and potential overcapacity drove a rotation towards cyclic and value sectors. The Nasdaq fell 1.84%, the S&P 500 was mostly flat, and the Dow, Russell 2000 and S&P Midcap 400 gained. Value stocks outperformed growth by over 400 basis points. Labor market data signaled cooling. ADP reported just 22,000 private sector jobs in January. Job openings hit their lowest since September 2020. Layoffs increased and initial claims rose to 231,000. Announced job cuts surged to the highest January total since 2009. In manufacturing, the ISM PMI rebounded to 52.6, its first expansion in a year, while services held steady at 53.8 for the 19th consecutive month. Treasury yields fell, driving positive bond returns, with investment grade credit gaining and high yield bonds facing mild pressure amid softer macro sentiment. Europe. European equities advanced, with the Stocks Europe 600 gaining 1.0% and reaching a new intraday high. Investor confidence was supported by optimism around the eurozone economy despite recent global market volatility. Major indexes across Germany, France, Italy, and the UK all posted gains. The European Central Bank kept its deposit rate unchanged at 2.0%, signaling confidence that inflation is stabilizing near its target. Inflation data reinforced this view, with headline inflation easing to 1.7% and core inflation falling to its lowest level since 2021. Eurozone retail sales softened in December, though overall consumer spending showed improvement toward the end of 2025. In the UK, the Bank of England held rates steady at 3.75% but struck a dovish tone, with policymakers hinting that rate cuts could begin as early as March if inflation continues to ease. Japan. Japanese equities markets posted strong gains, with the Nikkei 225 raising 1.17% and the TOPIX advancing 3.72%. Market sentiment was supported by optimism ahead of Japan's February 8 lower house election, where expectations are building for a stronger mandate for Prime Minister Sanai Takaichi. The end weakened to around 157 against the US dollar, pressured by expectations of aggressive fiscal expansion, including higher defense spending and potential tax cuts. Meanwhile, yields on 10-year Japanese government bonds remained elevated, reflecting concerns around Japan's fiscal position. On the economic front, household spending declined sharply in December, highlighting ongoing pressure from inflation on consumer purchasing power. Inflation remains a key issue ahead of the upcoming election, with proposed tax relief measures aimed at easing cost of living pressures. China. Chinese equities ended the week lower, weighed down by weakness in technology stocks and volatility in commodity markets. The CSI 300 and Shanghai Composite both declined, with Hong Kong's Hang Seng Index posted steeper losses. Economic data painted a mixed picture. Private PMI surveys showed modest improvement in both services and manufacturing activity, supported by stronger export orders. However, official PMI data suggested broader economic softness, reflecting ongoing challenges in boosting domestic consumption. Expectations remain that the People's Bank of China will implement further monetary easing later this year. G2 takeaway. This week underscored a clear shift in market leadership. Investors are rotating away from high growth technology towards value and cyclic sectors as labor markets cool and policy paths become more data dependent. While manufacturing shows signs of revival in the US and Europe, consumer resilience remains uneven globally. With central banks signaling patience rather than urgency, Markets are likely to remain sensitive to incoming economic data and policy signals in the weeks ahead. Thank you for watching G2's weekly market update. Stay tuned for more insights on global markets, macro trends, and investment themes. We'll see you next week. Until then, thank you.